Hi guys, welcome. AMD and Intel have both reported their quarterly earnings the past week. Intel has been the long-running market leader in the processor space and semiconductors, while AMD is the underdog and had been playing catch-up to Intel's dominance. But things have started to shift in recent times, with AMD finally having the technology to bring the competition to Intel. In this video, I'll be doing a side-by-side comparison to see whether AMD has finally caught up with Intel and which is a better semiconductor stock to invest in for the longer term. AMD is in blue and Intel is in red. And let's start with the growth metrics. Here's the quarterly revenue chart going back to 2016. Both companies' revenue has grown in this period but at a completely different pace. AMD's revenue has been growing at a much higher rate compared to Intel. AMD's year-over-year revenue is 93% while Intel dipped slightly by 0.5%. AMD scores a point. I'll keep the scores and tally them up towards the end of the video. The story is the same for quarter-on-quarter revenue, with AMD growing by 11.8% versus Intel's 0.2% dip. AMD scores another point. You might be wondering how come AMD's chart is so short compared to Intel. Intel is a much bigger company and so their revenue numbers are much higher. But as you will see later, the story is quite different when we get to the margins. It is the same pattern for net income. AMD's net income grew by 352% while Intel's dipped by 0.9%. Another point for AMD. Both score a point each for the quarterly numbers with a growth of 27% and 50%. Growing free cash flow is a vital characteristic of a growing company. The bar chart represents the trailing free cash flow and the trend is on the way up for AMD and on the way down for Intel. Another point for AMD. On a per share basis, AMD and Intel's earnings per share has grown by 346% and 4%. Both score a point. It is the same for the quarter-on-quarter earnings per share numbers. Next is the price earnings growth ratio or the PEG ratio. It measures the rate of change in stock price compared to the revenue growth. We are looking for a PEG ratio between 0 and 1. AMD scores a point with a PEG ratio of just 0.35. Intel is not even in contention as the PEG ratio is negative due to negative year-on-year revenue growth. From the growth perspective, these numbers clearly show AMD is growing while Intel seems to have peaked and has started to decline. Let's now compare the margins. The gross margin is an interesting chart. Both have high margins, but Intel's margins have started to decline slowly while AMD's is rising fast. This is the shift that I was talking about earlier. I studied both companies' financial reports and one of the insights that I learned is the declining ASP or average selling price for Intel's products and growing ASPs for AMD. Market leaders command higher ASP due to the demand for their products, and AMD's rising ASP and Intel's decline signals a shift in demand for their products. But based on the magnitude of revenue, Intel is still the Goliath. Both companies also enjoy a high net margin at 18% and 25%, another point for each. The quick ratio represents the ratio of total available cash and cash equivalents versus the total current liabilities. It measures the company's ability to service its short-term financial obligations within the next 12 months. A ratio of 1 or above is preferred. AMD's quick ratio is 0.9 and scores a point. Intel's quick ratio is poor at 0.19. Intel has an enormous mountain of long-term debt at $31.7 billion and AMD is just $300 million. AMD scores another point. Next up is valuations. At a PE of 34.7, AMD is overpriced, and at 11.8, Intel is in the value zone and scores a point. The price to book is the current price of each stock divided by the book value of each share. Value investors look for profitable companies that are traded below 5 price to book. But it is hard to come by and you must also be very careful. Sometimes companies that the market has given up may end up with such valuations. AMD is grossly overpriced at 16.8 price to book. Intel's 2.3 is very low. And as stated earlier, Intel might not be the favorite semiconductor player in the market anymore. Let's tally up the scores. AMD is a clear winner with a score of 12 compared to Intel's 6. AMD scored well for growth-related criteria such as PEG ratio and year-over-year revenue growth. AMD also scored well for the margins. Intel scored well for the margins too, but fared poorly for growth and debt levels. AMD is still the David, but is growing fast. And if they continue with the same level of growth, Intel the Goliath will be in danger within the next few quarters. My preference would be to invest in AMD due to its potential growth, but the valuation is a bit on the high side at the current price. Subscribe to my channel if you have found this sharing useful, and hit that notification bell so that you don't miss out on any of my future videos. Do let me know if you'd like me to do a video on any other stocks, and I'll see you soon in the next one. Meantime, enjoy these other videos. Bye for now.